Hi all, welcome to HM Commerce Education. This is CA Manichandana. Very happy today. Actually, very happy today. The reason being, you all supporting me in this journey. We have crossed the 1,000 subscriber mark, and I hope my content is helping you. I hope you are utilizing this resource, this free resource. Um, hope um, I'm giving the best. I'm trying to give my best every day, and hope this helps you. Right? This gives me a lot more enthusiasm to work harder and to give the best to give the best of myself. This being one reason, the other one being, your sir, your accounts teacher, your sir, C.A. Hari Prasad, has given his first class in online on our HM Commerce Education platform today. I request you all to watch the video, and students, I want you all to comment on my video. I frankly want to know how how we are guiding you. Are we how are you receiving our videos? You want us to improve in any in any manner. I am ready. We at HM Commerce Education are ready to take it. Any kind of feedback, be it positive or negative. I am here to receive it, right? I just want to help you all. I want you to pass the right direction. I want to give that right direction and the basic clarity, the foundation. I want to lay that foundation to you all so that you can excel in your CA inter and CA final courses, right? I want your basics to be so strong. That's the reason I stress a lot on the topics whatever I do, right? And you all know that we at HM Commerce Education only give English classes. The basic intention behind us teaching in English is that, see, we as students, we had a lot of, we did not get the right resource, uh, to study the materials, be it the study material or be it the teachers. We used to face a lot of difficulties in during our student phase because um, the market was flooded with Hindi lectures. We as South Indians, we used to face a lot of difficulty with understanding the subject in a different language, which we are not that fluent in. Yes, we do understand Hindi, but when it comes to the numbers being told in Hindi, the explanation being given in Hindi, we used to face a lot of difficulty. So that point of time is when we decided, to start and help students. And also one more important thing, why I personally feel studying in English is listening to lectures in English is very important, because you give your answers in English, right? See, for students who have opted the Hindi medium, that's a different thing altogether. But when you're giving your exams in English, uh, it's very basic that you have to learn in that particular language. See, when you learn in a different language and you write your exams in a different language, I don't think that will add on to that additional benefit. It's always important, at least for a subject like law, or not only subject like law, be it any subject, if you know English, why are you studying in a different language, children? See, people who face difficulty in understanding English, who are from a local language, they have their, could be Kannada, could be their mother tongue. They could have studied Kannada medium, or they might have studied Telugu medium, or they might have studied Hindi medium. For these students, it's very difficult for them to understand English, and they feel very comfortable when teachers teach them in their local language. For those students, it's completely fine. But students who know English, they're very much fluent in talking and understanding this particular language. And when you're giving your exams in English, children, please try to learn also in that particular language and think in that particular language, because your vocabulary will improve, and your answers will improve. Whenever you write your answers, when you know the language, when you have learned in that particular language, it's very easy to write in that particular language. Yes. So this is something which I wanted to share with you all. I'm really happy for the kind of response you've given us. Right. I also request to give me a honest feedback, a very honest feedback. Children, please don't hesitate to comment. Please, students who are watching the video, please do not hesitate to comment. or you can directly test me if you do not want to comment in the comment boxes. You can leave me a personal message. I'll share you my number. Yes, you can always, any of your doubts or however you're feeling about the lectures, you can give me honest feedback. Yes, this is CA Mani Chandana, right? I'm giving you my personal number. Please do not misuse it. Yes, please use it for the right. If you really have any doubts or however you're feeling about the lecture, please let me know. Right? Okay. Please do not hesitate to comment. It's better you comment. Okay, but you have any personal, if you're feeling very difficulty in any in any part of your study phase, you can let me know anytime. I'm there with you. I'm there to help you all. Right? Okay, students, this was it. And I also told you that my partner, CA Hariprasad, he has uploaded his first video on YouTube, the accounting basics. I request you all to watch the video and share it with your friends so that it will be helpful. Right? Very good. Great. So if you have done with this, let's start with our topic. We'll continue with Companies Act. Right? Okay, we're done with the classification of companies, right? Okay, we have to start with mode of registration or incorporation of the company. But children, before even doing that, I just want you all to know the basic definitions of, shares, preference shares, and classification of capital, all of these. Let's do this first today. And maybe the next classes will go to that. I'm not skipping anything. Okay, it's just that I'm, making sure we'll do the basics first. Okay. Right. Okay, come to page 492. Children, also, this is my material. Okay, you can always access if you want access to this material, you'll have to download our app HM Commerce Education or visit our website www.hmclasses.com. Okay, where you can find this particular material. This material, I've put in a great effort in compiling this material. It's like so many of my sleepless nights have been put in compiling this particular material. I was very happy that I've designed a book which is so colorful and which is so interactive, and even the fonts which I have used is similar to your handwritten format, so that it will help students to grasp things quickly. Yes, this is one book. You can purchase this on our website, and you can listen to my class. My classes will be on YouTube for free, right? And you can keep my material with you. And students who cannot afford this, also I've told you that I'm giving it at cost, and the cost is high because I do not have a student base, a larger student base, because of which the printing cost is really high. It's a colorful print in bond paper. We are using bond papers to print the book. The quality of the book is really good. Okay, so I request you and your friends to tell all of your friends to purchase it. Don't worry, the classes here, I will be uploading it on YouTube. So you can listen to the classes. And if you have this book handy, it'll always help you, right? Once we are done with the Companies Act, I'll be starting with Indian Contract Act, right? And over time, and I know for you all, if you're concentrating for Jan attempt, students, if you're concentrating to give your attempt in January, and if you have already uh, done with the classes, what is the reason for you to fail? You've done your classes, you have put in that effort, but somewhere you're failing. You could not make it in the exam. What is the probable reason? Have you ever analyzed why did I fail in my exams? Probably your basics are not strong, or probably you did not put in that the right effort to clear your exams. Maybe your revision, the multiple revisions you did not do, or probably you went blank in the examination hall. What could be the possible reason for that? Because lack of revision again. There are a few set of students who have really put in that hard work but could not make it to the exam, and there are few set of students wherein they they know themselves that they have not put in the right amount of effort. So for the second category, you all know where you've gone wrong, you all know where you have done the mistake. Please correct yourself, right? But the students who according to them have put in effort, have dedicated, have given that time, have tried to study, put in that kind of a lot of effort. They've waken up early mornings, late nights, and they've sat for hours together, studied, but still could not make it in the exam. Students, what is the reason? First ask yourself, where did you go wrong? You have gone wrong, that is the reason you have failed. If things were right, if everything was right, today you would have passed. Because you have failed, you are lacking in something. Yes, you are lacking in something. Please realize yourself. You yourself have to ask this question. Ask yourself, where did I go wrong? Did I skip any chapter? Did I miss out on any topics? Did I not revise? Did I did I not solve the last year question papers? Did I not go through? Did I only study and did not solve the question bank? Right? Did I not see the MTPs? Did I not see the RTPs? Was I not conceptually clear? Were my basics very weak? Am I just doing away, just taking this course very lightly? Why? What is the reason? What is the reason? Please ask yourself. Please write it in a book. Please write it in a or take a sheet of paper. Write down. I know you are in that particular state wherein you are thinking so many things. You're thinking so many things. You're like, okay, should I continue this particular a professional journey? Should I drop it here? Should I concentrate more on my BCom exams? Can I really pass? Is the kind of these are the thoughts which are running on in your mind. No, children, please don't think anything. Please don't. I have already told you in my previous video that you should not take decisions when you are emotionally weak. So I think you have given it that time, 2 or 3 days. Your results are out, and now you have somewhere settled down. Now, please ask yourself, like, where are you going wrong? Please do not make that. Please do not repeat the mistakes. The mistakes done are good because they teach you lesson. But once you do a mistake, you should not repeat that mistake for the next time. If you repeat your mistake and if you do not learn from your mistake, uh, it's very difficult, even in your studies or in your life. There's so much in your life. There is see, life is testing you, right? People who have watching this, if this is your first attempt, it's very good. Please learn. You should not do mistakes. But who have already given an attempt in your CA foundation and who could not clear it, it's very natural for students to fail in CA exam. Please feel free. Please feel free. It's okay to fail. I've already told you it's okay to fail. Even I have not cleared in my first attempt or second attempt. It's okay. It's okay to fail. I've told you all. Now you should not fail again. Failing again is something that you have not looked back to your mistake. You do not know, you have not analyzed yourself, right? So please analyze. Okay, write down where you went wrong. Make sure you do not repeat that particular mistake again. Okay, we will shortly come up with the study plan for the January 25 attempt. Okay, but who are watching, students who are watching my video for the first time, if you are seeing the law classes for the first time, and if this is my first lecture, you can please continue watching the video. If your attempt is in January, see if you have started, possible, you could have kept your law to the last, possible. And even though you've done your, the coaching long while, people would have already finished their coaching long while, say for example, 4 or 5 months back, they would have finished their coaching. But it's always okay if you have not started law, it's always okay to start now, because very close to exams, your concepts will be very clear if you keep revising every day once your classes are done, and if you're perfect with the topics, nothing like it. No? You're much ahead of the other students who have completed their coaching 3 or 4 months back. You don't have to worry. You don't have to worry at all, because everything is new. Something which is new, if you revise it multiple times, you're done. And even for the students who have completed, a coaching 4 or 5 months back, and you have completely forgotten this subject called law, what is there? Because there are there are 4 chapters. I'm sorry, there are 4 chapters for you in say a foundation, and it's very easy for people to forget. They would have attended some class, some offline classes. There are many offline classes. I should not name it, but the concept, the basic, they do not build up the basics. For any CA students, the basics must be very, very, very strong. This is what I stress upon. So possible that you wouldn't have got the right coaching in the right manner, because of which you are not very much confident with the subject. For you all, this is the video. This particular class, whichever I'm taking, that will be the best. Okay, yeah, probably the classes might take another 1.5 months. That doesn't affect you, because because you're giving that amount of time for your law subject every day. Say for example, you're doing class for 2 hours a day, and after that you're revising it for maybe 1 hour, 1 hour for revision, and then whatever the question banks related to that particular chapter you're going to solve, right? This kind of study, it will help you in your exams, because you are very much familiar with the subject. You are in subject just before the exam also, you are in touch with the subject. This will help you a lot. Don't worry, don't think that, these classes are coming up now, I've already done my classes, I don't remember that classes, but still I cannot give so much of time to law right now in this point of time. Please do not think like that. The matter, you can at least, if you have already done your class, you can increase the speed of the video. If you have not completed a class earlier, you can sit now for 2 hours every day and watch my lectures, and once you finish the lectures, you can revise it. So done. You're very much familiar with the subject. In your during exams, you're very fresh with the subject. You have not forgotten it. You've not forgotten it. You have not done it long time. So to forget that, right? So everything is for good. Whether if you have failed, it's for a good reason. If you have cleared, it's for a good reason. If you're doing this class, if you're doing my class, it's for the best reason, right? Yes or no? So children, so this is what I wanted to tell you all. Okay, so please tell your friends also about this. I'm very much happy. Please watch my lectures. Do subscribe, and your accounts class is also, the basics and the revision lectures also will come up in maybe few days. Okay, please do subscribe. Please do help us reach out to a lot more students. Let our dream come true. Yes, thank you all for your support. Very happy. I'm really, really very happy. Students, thank you a lot. Right? Okay. So let's start off with classification of capital. Okay. Fine. On page number 492. Right. The term capital has a variety of meanings. The term capital has a variety of meanings. It means one thing to economists, another to accountants, and still another to businessmen and lawyers. Basically, what do you mean by a capital? Capital is something which, when you start a business, the amount of money you will be pulling in to start that particular business is called the capital. That is what you all know, right? Even in accounts, you're very much familiar with this particular word called capital, right? Okay. In relation to company limited by shares, in relation to company, we're talking in relation to company limited by shares. The word capital means share capital. Word capital means share capital. That is the capital or figure in terms of so many rupees divided into shares of a fixed amount. Now, what is this? Children, when say we all want to start a business. We all want to start a business. Say we are around 10 people and we want to start a business. We want to incorporate a company. We are how many people? We are 10 people, right? We want to incorporate a company, and we need a capital of rupees 10 lakh. We want a capital of say rupees 10 lakh. Okay, now each one of us will subscribe to say 10,000 shares. We will subscribe to 10,000 shares. You, me, and the rest 8 of them, we will subscribe to 10,000 shares each. So how many people are there? Ma'am, we are 10 people. We are 10 people. How much is it? Or how many number of shares will the company have? The company will have, ma'am, 1 lakh shares. The company will have 1 lakh shares. Yes or no? See, the capital, the share capital, that is the capital or figure in terms of so many rupees. How much is it? Ma'am, 10 lakh divided into shares of a fixed amount. Shares, how many shares? 1 lakh shares. So what is the face value of the share? What is the face value of share? Rupees 10 lakh divided by 1 lakh shares. That is rupees 10. So you can decide the face value of your share. Yes or no? You see, it's not necessary that the face value of the share has to be 10 rupees only or 1 rupee only or say 100 rupees only. No, you can decide. You can keep the face value of the share. What is the face value of the share? Nominal value of the share. Yes or no? So you can decide upon it, right? Yes, ma'am. Okay. In other words, children, the contribution of persons to the common stock of the company form the capital of the company. The contribution of persons. We are 10 people. We are contributing to the common stock of the company. Ma'am, what do you mean by common stock? Common stock is nothing but the overall stock of the overall shares of the company. Let's say, for example, if I hold one share of Infosys, I own one share of the Infosys stock. Infosys stock meaning the bundle of shares, meaning a bundle of shares, a stock of shares. Okay, not actually stock of shares, but basically the entire shares is called the common stock of the company. You don't have to break your head. Basically, in basic normal terms, stock and shares, we use it interchangeably, but most of the time we call it as share capital, right? Okay, form the capital of the company. The contributions of persons, say we are 10 of us, we contribute to the capital of the company. That is nothing but the share. That is nothing but the capital, share capital of the company. Okay, just give me a moment. Okay. Right. The proportion of the capital to which each member is entitled to is his share. Okay. If I have to make you understand, say there is a company, with 20 lakh as its capital, right? Now, say there are 20,000 shares. Okay. There are 20,000 shares of rupees, 2 lakh shares. 2 lakh shares of rupees 10 each. How many shares? 2 lakh shares, ma'am. Okay, in this, say one person holds 50,000 shares. How many shares? 50,000 shares of rupees 10 each. So how much is it? Ma'am, rupees 5 lakh. Rupees 5 lakh. Yes or no? Yes. So this is my share. Say if the entire share capital is 20 lakh, my share, say who's this? This is money. Okay, this is money. My share is 5 lakh. Say one more person holds 1 lakh share, say 10,000 shares. 10,000 shares of rupees 10 each. Yes. What is my share? 1 lakh. Yes. So the other person is 1 lakh. Now come. Okay, see, the proportion of the capital to which each member is entitled to is his share. What is my share? What is the other person's share? What is the other person's share? This is that is his share of capital. Okay. A share is not a sum of money. It is rather an interest measured by a sum of money and made up of various rights contained in the contract. So they're trying to define a share. They're trying to tell what is a share. So this is something which is given in a case law. Okay, I'll just show you where it is given. Okay, there is some case law called Borland Trustees versus Steel Bars and Company Limited. So here they are telling you what is a share. They're telling you what is a share. Share is an interest in the company. A share is not a sum of money, but it is an interest measured by a sum of money and made up of various rights contained in the contract. What is this various rights given in the contract? See, there are very n number of rights which are given to the shareholders. Few rights are contractual rights and few rights are there are certain other rights which accrue to him according to the provisions of the Companies Act. What they're trying to tell you is a shareholder gets a lot of rights. What are his rights? Rights with related to contractual rights. So whatever is there in the shareholders agreement, there are many rights which are given in the shareholders agreement. Those rights also he will have. That is called the contractual rights. And also there are many other rights which are given to him according to the provisions of the Companies Act. Now, what are those rights which are given to? Say, for example, voting rights. Voting rights. He has the right to vote in the annual general meeting. Then right to dividend. Right to dividend. Yes or no? Right to participate in the general meetings of the company. Right to participate in the general meetings of the company, etc., etc. Yes or no? Yes. Also, he can transfer his share. You can transfer shares. He can transfer his shares. Yes or no? So all of these are the rights which are given under the provisions of the Companies Act. Getting it? See, the share is not a sum of money, but it is an interest measured by a sum of money, and it is made up of various rights which are given in the contract, also given under the provisions of the Companies Act. Yes, getting my point? Yes, ma'am. Next, fine. Let me do this shares also first. We will read it off. Okay, what is there in this? There's nothing. It's very simple. Okay, what is this? Ma'am, Section 2, Clause 84 of the Companies Act 2013 defines the term share, which means a share in the share capital of the company and includes stock. What are they trying to tell you? It is a share. The share means share in the share capital of the company. Share means your share, the share in the share capital of the company. So, for example, if this is the entire share capital, what is the share? This share, it's a part, right? Yes or no? It's a share in the share capital of the company, and it includes stock. Share also includes stock. Good, very good. A share thus represents such proportion of the interest of the shareholders as the amount paid upon thereon bears to the total capital payable to the company. This is nothing but whatever the paid up capital. Say, for example, the face value is 10. The face value is 10, and paid up value, whatever you have paid, is 7. Whatever you have paid is rupees 7. So you will be your share, your interest will be only 7 rupees. Your interest will be only 7 rupees. Say, for example, if the company winds up, you will get back, if it has more assets, you will get rupees 7 and you will not get rupees 10. So it is whatever the amount you have paid up, that will be the share, that will be your share in the company. Say, for example, if you have paid the entire 10 rupees, that the entire 10 rupees is your share in the company, right? Okay. It is a measure of the interest in company's assets to which the person holding a share is entitled. It is basically the interest in the company's assets. You are not the owner of the company, right? You're not the owner of the company's property. You will see here. See, you should note that shareholders are not, in the eyes of law, part owners of the undertaking. The undertaking is somewhat different from the totality of the shareholders. Yes, shareholders are the owners of the company, yes, but they are not the owners of the property of the company. Yes, say, for example, the company owns a building. We as shareholders, we are owners of the company, but we are not the owners of the property of the company. That means we are not the owners of the building. Say, for example, I hold 100%. Say, for example, I hold 99% of shares of one company, A Limited, and A Limited in its book has, say, a building of rupees 5 crore. It has computers of, say, worth rupees 10 lakhs. It has, say, furniture worth, say, 1 crore. Now, I cannot come to the company just because I hold all of majority or all of the shareholdings in this particular A Limited. I cannot come take away furniture. Furniture is only mine. It is mine only. I'll take it and use it in my home. And if, say, it has a car, you cannot take that key, take away the car, and you cannot tell it is your asset. Getting it? Yes or no? Yes. Fine. So this is it. Okay. I'll finish this also, and then we will come back. Okay. Then we will talk about the nominal capital. We'll talk about issued capital. We'll go back. Okay, fine. Now, shares are movable property. Shares are movable property, and they can be transferable in the manner provided by the articles of the company. Obviously, shares are movable. You can transfer your shares from one person to another. They are movable property. Yes, and they are transferable in the manner provided by the articles of the company. Obviously, if the articles restricts you to not transfer the shares, obviously the articles will have to follow the articles, right? Yes, ma'am. Easy, easy, ma'am. Shares shall be numbered. Obviously, it will be given a distinguished number, a distinctive number. The shares will be given a distinctive number. This implies that every share shall be numbered. Every share shall have a distinctive number to it. However, this shall not apply to a share held by a person whose name is entered as a holder of beneficial interest in such share in the records of the deposit. I told you what is shares held for beneficial interest. Yes, I've already explained this concept to you. So this particular distinctive numbering will not be applicable to the holder of a person holding it for the beneficial interest or in such share. Right? If this one is done, let us go back to the kinds of capital. To the kinds of capital. Right? Okay. Now what is this? Very simple, children. Simplest of the simple topics we are discussing today. Right? What are these? Ma'am, nominal capital or authorized capital or registered capital. You would be very much familiar with this authorized capital, right? You are familiar. Now, what is this authorized capital? See, children, whenever we want to incorporate a company, whenever we want to start a company, we usually think what is the amount of capital we will require in order to incorporate that particular company and run the business. Say we decided to have say a 10 crore of capital. We will need 10 crore of capital to run the business. See, when I tell authorized capital, what I basically this is the maximum amount of this is the maximum amount of capital that the company can start with. This is stated in the memorandum. This is stated in the memorandum as the maximum amount of capital which can be brought in by the company. Ma'am, it is the maximum amount means, see, first of all, if I start a company with 10 crore, later I cannot increase this, ma'am. Is this the maximum only? No, children, it is the maximum amount. Yes, I agree, which is stated in the memorandum of the association of the company. But if you want to increase, you can always do it by altering the memorandum and the articles of association. Basically, you have to first read the articles of association. If it allows, then you can alter the memorandum and you can increase the authorized capital. But if articles, it does not provide, it does not have the clause of increasing the authorized capital, then you need to go amend the AOA first, that is articles of association first, and then you have to amend the MOA. This basically is not there, but I just told you for your information. Right now, keeping all that aside, so what did I tell you? Say in my mind there is 10 lakh. So this is the maximum amount of share capital of that particular company, which is stated in the memorandum. Now, how will I decide on this 10 crore rupees? Is that, say, for working capital, I will require, I'll have so much of business on a daily basis. I'll require for payment of salary, payment of rent, etc., for stock, everything. I'll require, say, around 5 to 6 crore. I'll decide my working capital will be around 6 crore. Okay, and I'll also decide, okay, maybe in the future I have plans of expanding the business. Also, what if there is some emergency? Also, I'll think of all of these, right? And I will keep a reserve capital. I'll keep some reserve capital of, say, rupees 4 crore. Reserve capital, maybe in some emergency, or this is that part of capital this is that reserve capital. What is this reserve capital? Reserve capital is that part of the authorized capital which has not been issued. This is kept for some emergency or for your future plans. For future plans, say for example, you want to right now you don't have that plans, but maybe in the coming future of say 3 or 4 years you want to start a business somewhere else. Now you have started in Bangalore. Later you want to start somewhere in the northern part of our country, and you want to expand. For that also, if you're keeping in mind, you would have kept a reserve capital as well. So this includes this is usually fixed at the amount which is estimated, basically estimation. You cannot be, obviously you cannot tell this much only I want, this much only I want, this much only. No, it is an estimation by the promoters, by we the shareholders who incorporate the company. We will estimate, and the company will need, including the working capital and reserve capital, if any. Basically, this is how it works. Usually authorized capital is set at a higher amount. It is usually set at a higher amount. Okay, usually entire authorized capital they will not issue. In some cases they do. Okay, in some cases they do, in some cases they don't. Fine. Okay, what is this authorized capital or nominal capital? It means such capital as is authorized by the memorandum of the company to be the maximum amount of share capital of the company. Authorized capital means authorized by the MOA to be the maximum amount of capital of the company. So simple. Again, What is authorized capital? Authorized capital means that capital which is authorized. Authorized by what? Authorized by memorandum of company. Ma'am, what is this memorandum of the company? We will just do, children. Okay, in that there is a clause called capital clause. In that capital clause, we will write down the authorized capital. So the company has authorized capital of so and so amount. Getting it? Okay, it is authorized by the memorandum of the company to be the maximum amount of share capital of that particular company. Yes, it is a sum stated in the memorandum as the capital of the company, with which it is registered, being the maximum amount which it is authorized to raise by issuing shares, and upon which it pays the stamp duty. Ma'am, what is the stamp duty? Obviously, children, when you incorporate a company, you will have to pay stamp duty based on the share capital. This keeps changing. Okay, this keeps changing. Practical life, I'm telling you. Based on the rates given, then you will have to accordingly pay it to the government. Right? Clear? Nominal authorized registered capital. Yes, ma'am. Very clear. Right. Next, coming to issued capital. Now, what is this issued capital? This is that part of the authorized capital which you are issuing it to the public. Which you are issuing it to the public. So I told you how much ever the company requires from time to time, it will issue. Okay, fine. Say out of this 10 crore, the company say issues around 6 crores. 6 crores. Yes, 4 crore they have not issued. Okay. 6 crore is what? Issued capital. What is this? Authorized capital. 10 crore is authorized capital. Issued capital is what? Ma'am, 6 crore. Okay. Fine. Issues from time to time for subscription. To be so, whatever the capital the company issues, that the public will subscribe. That will be subscribed by the public, right? Okay, it is that part of the authorized capital which is offered by the company for subscription. It is that part of the authorized capital. Yes, out of this 10 crore, you are issuing 6 crore. Meaning this which is offered to the public for subscription. So people will subscribe from this issued capital. Whatever the company has issued, the public will subscribe. So what is subscribed capital? See, it is that part of the capital which is for the time being subscribed by the members of the company. Which is being subscribed by the members of the company. Okay, come now. Okay, and includes the shares allotted for consideration other than cash. Okay, probably you wouldn't know it. If you know, good. Okay, but probably few students will not be aware of this. Ma'am, what is this consideration other than cash? Children, it's not necessary. Most of the times it's cash. You get in cash and you're given shares, but it's not always necessary that you have to bring in cash. It's always good that you bring in building as capital. See, the building was in your name. You now got that as the capital. You got that building and you invested in the company as your capital, and that will become the property of the company, right? So now, did you get shares? You gave company, you gave building, and you took shares. So this is nothing but issue of shares other than cash. Where is it? Shares allotted for consideration other than cash. Other than cash could be building, could be car, could be could be anything. Could be car, could be building, could be what plant and machinery, whatever you bring in, you are given shares. You are given shares. Shares allotted for consideration other than cash. For consideration other than cash. So the value of it, say for example, you get in a car. Car is say for example 10 lakhs. 10 lakhs. Then or suppose you bring in a building. Building is say for example 10 crore. So this is the capital, right? This is the capital. The value of this 10 crore will become the capital, and you have given it as a, obviously you're bringing it as capital, and shares are being issued to you. These shares are allotted for consideration other than cash. Okay, the value of this particular building or the car will be the capital. Right? Your capital, which forms part of the company's capital. Getting it? Okay, right, ma'am. Yes, subscribed capital. Okay, what was the authorized capital we had? We had 10 crore and issued was 6 crore. Now, children, it is not necessary that whatever the company issues, the entire issued capital must be subscribed by the public. No, it is not necessary. See, if people are not interested in your particular company, they will not subscribe to the maximum. Say for example, 6 crore, entire 6 crore might not be subscribed. If your company is doing great, very good, it's possible that have you seen all these IPOs which come up? What is this IPO? Initial public offering. The first time the company is offering it to the public. Okay, so when these IPOs come up, say recently Ola Electric, then Hyundai, all of these, the subscription rate is very high. It'll be very high. It need not be. See, obviously, when companies come with IPOs and they are very good companies, they are making a lot of profits and there is a lot of potential in those companies. Always the subscription rate is very high. Now something might come to your mind, ma'am. What, ma'am? How will the company? All that you don't have to worry. There is something called pro rata allotment of shares. Using that concept, the shares will be allotted to the people who have subscribed to the shares. Okay, don't have to go in detail. But what I'm trying to tell you is, issued capital, out of this issued capital, the subscribed capital need not be the entire 6 crore. Okay, could be 6 crore also, could be, for example, 5 crore also. So if a company does not have great potential, people are not interested in company, they are not subscribing to your company capital. Getting it? Yes, ma'am. Okay, it is a nominal amount of shares taken up by the public. The people are subscribed to the capital of the company, right? Where any notice, advertisement or other official communication or any business letter, billhead or letter paper of a company states the authorized capital. If any of these, what are these? Notice, advertisement, other official communication, billhead or letter paper, any of these, if it states the authorized capital, the subscribed and paid up capital must also be stated in equally conspicuous characters. Ma'am, what is this? Why something like this? See, children, obviously, a company can have authorized capital of a higher amount. I always told you, of a higher amount, but they might have not issued the entire capital, right? Say, it can write, my authorized capital is 100 crore. And you write in your bill head or whatever, so and so company, our authorized capital, authorized capital is 100 crore. Meaning what? You're a big company. But you might have issued only 10 crore. Or you might have issued, and out of the 10 crore, maybe only 2 crore is subscribed. Yes or no? Only 2 crore is subscribed. So what is the actual capital of your company? Only 2 crore, no? Yes or no? So what I'm trying to tell you is, wherever you state the authorized capital, the subscribed capital and the paid up capital must also be stated in equally conspicuous character. Same. You write my authorized capital is 100 crore. Okay. Small terms and conditions apply, no? Like that you're writing issued capital is 2 crore and what subscribed capital is say 50 lakh. Not allowed. Even if you're writing this authorized capital so big, even these also should be in the same size. Getting it? Equally conspicuous characters. Getting it, children? Yes. So if there is a default, company and every officer, company is a separate legal entity. So company also has its individual personality. It is an artificial legal person. Individual. So company will also pay fine. It will also pay penalty. Right? Also, every officer who is in default, every officer who is making the default will be liable to a penalty extending to rupees 10,000 and 5,000 respectively. So this is for company, this is for officer. Right? Everyone, are we clear? Yes, ma'am. Next, called up capital. What is this called up capital? Okay. Called up capital is such part of the capital which has been called for payment. Say for example, again, authorized is 10 crore, issued is 6 crore, subscribed is say 5 crore, okay, and called for payment. So company is asking for payment from the members. So you have subscribed, company has issued, you have subscribed. Now you have to pay, no? Will not pay. You have to pay, no? So it is asking for payment from the shareholders or members, okay, as part of the capital which has been called for payment. Say called up capital is say let's say 4 crore. Let's say 4 crore. Okay, it is a total amount called upon the shares which are issued. Whatever they have issued, they're calling for payment. Now you please come and pay. Right? Paid up capital. See, once the company calls, it becomes the obligation of the members to pay that amount. It is their obligation. But even though it's their obligation, it's not necessary that every shareholder will pay on the particular date. There are so many reasons for the shareholders to not come up and pay the amount for which they have agreed to. Right? Obviously, it is their obligation to pay, but it is not practical. It might not be practical for all the shareholders to pay on that particular date. So whatever amount, so that is called calls in arrears. So they've called for payment, but they have not received the entire called up capital. So that is called call in arrears. Right? Calls in Yes. So this paid up capital is the total amount paid or credited as paid up on the shares which they have issued. It is equal to called up capital less calls in arrears. Say for example, 4 crore is the called up capital. In this they have not received say 0.5 crore, 0.5 crore, that is 50 lakhs. So what is the paid up capital? 3.5 crore. This is the paid up capital. Getting it? Everyone understood? Yes, ma'am. Right. This is with respect to this, the types of share capital. Okay, classification of capital. We're done with this. And we're also done with the shares. What do you mean by shares? And there is some case law which has been given, and they're trying to explain what is a share. This is a very basic concept which you all have to know. And when we come to kinds of share capital, so this is interesting. So what is this kinds of share capital? We have equity share capital, we have preference share capital, right? We have equity share capital, we also have preference share capital. Okay, let's write. Kinds of shares, right? We have, what do we have? We have equity share capital, or you can write types of share capital, you can write anyways. Types of Baiko Betrappa. Yes, people would have started writing, they would have written. So okay, that is also fine. Okay, and now someone, if the teacher changes that particular topic name or whatever, they would have started with a new page, all fresh page. They would have started. They would have turned their books into a horizontal manner, and they would have started. They would have written kinds of share. And now after this, write KINDS. I changed no to types of share capital. Yeah. So this is how they'll react. Okay. It's okay. Kinds of shares, or you can put a slash and write types of share capital. Now there are a few more students who would have already scratched kinds of share capital, kinds of share. Now I told them to put a slash and write. Now then again hit their head. I'll not talk. Fine. Types of share capital, equity. You know, when I'm in my offline classes, no, this is what happens. They'll once I ask them to write, they'll start writing, and then when I try to change it, they'll start, ma'am. So that's the reason I'm trying to tell you. It's okay. It's okay. It's okay. It's okay. You can do anything. Okay. Equity, share capital. Equity, share capital. The other one is what? Preference share capital. Equity share capital and preference share capital. In equity share capital, we again have shares with equal voting rights. Shares with equal. Students, can you understand my handwriting? Shares with equal voting rights. Shares with what? Differential voting rights. I've already explained this to you. I've just given you slight introduction to this differential voting rights, also called as DVRs. Differential voting rights. You all are aware. If you have seen my previous lectures, you all know what is shares with differential voting rights. Okay. Now, preference share capital. Preference share capital. Ma'am, what is this preference share capital? Okay, this will write that later. Okay, first let's discuss equity share capital. What is equity share capital, children? Equity meaning, see, when you subscribe, when we're talking about equity share capital, these equity share holders, they are the owners of the company. They are the owners of the company, meaning if if the company is doing well and great, good, they'll get their dividend. Dividend, yes, everyone knows what is dividend. So they'll get their dividend. Everything is good. The share prices will increase. The value will increase. If we are the owners, so if something goes well, we are benefited with it. If something goes bad, obviously we are the ones who are the most affected because of it. Right or no? Right or wrong? See, if something you own it, if it performs really well, you're very happy. You will get the fruits of that benefit. But if that something goes bad, if it goes bad, obviously you are the ones who are suffering the most because you're the owners, right? And when it comes to equity share capital, equity shareholders, they will obviously get the dividend. And if the company is performing really well, the market price of the shares will go on increasing and increasing. And if something goes wrong, if something goes wrong with the company, the most affected ones are the equity shareholders. So if you go and see these, you would have seen in the stock market, there are you come across many companies which have gone into losses, which have almost gone to the state of, Jet Airways, right? Kingfisher Airlines. These companies, the Satyam scam. How did there are Punjab National Bank, the shareholders. I was a shareholder of Punjab National Bank, right? How much of losses we suffer when the company performs really when the performance of the company is not up to the mark, or if there is some scam or something is happening, some fraud is happening in that particular company. The most affected ones are the public. If there is some time, first I want to finish this. We can always discuss about scams, and it's always interesting. But because your exams are close, I'm not talking about any of those scams, how it happened in the share market, how the share market crashed. The US markets, when the banks, there were so many, you know, it's very interesting to know all of it. So once you are into finance field, there are so many interesting things which you will be inclined to. And even now, whenever you have time, you can sit and you can Google and you can learn about how these are affecting. I have always told you, banking sector is the pillar of the economy. These are the backbones of the economy, and if these banks do not perform well, the financial status of the country will bleed. It will bleed. I'll tell you, the banking sector should be so strong. That is the reason why the government comes up with so many rules and regulations. There is so much of, it's a very much regulated sector. Banking sector is a very much regulated sector. So when the banks do not perform well, obviously it will affect the nation, right? So why am I telling you all of this is because, so when we invest in shares or equity shares of the company, if the company does not perform well, obviously the ones who are affected the most are the public. Are the public, right? Okay. What happens is, say, if a company goes into liquidation, and the assets are not sufficient to pay off the liabilities. If the assets are, say, for example, assets are um, say 10 crore, okay, whereas liabilities are, say, 15 crore. 15 crores. Say now, after paying off all the liabilities, say first you will pay the secured debtors, you will pay the secured creditors, so not debtors, sorry, secured creditors, right? You will pay the debenture, all the secured debentures, secured creditors, all of these. Okay, secured debenture. You can also write debentures, right? Then long-term secured long-term debt debentures. You can write secured debentures. Okay, secured non-term debts, long-term debts, all of these. Then comes the unsecured creditors, Then comes the preferential shareholders. Preferential shareholders is after all of these are, and the employee dues, employee dues. All of these are paid first. Any government dues, all of these are paid off first, and last, whatever is left, that is given to the equity shareholders, children. That is given it to the equity shareholders. Obviously, are the owners of the company. It's like, see, when if any of your relatives come home, and if your mom has cooked food, who after everyone have their dinner, you will be served last. Yes, the house people, whoever are in the house, we when we call someone for our relatives to our house, what usually happens is we first Give the food to the relatives. Once they are fulfilled, once they are happy, whatever is the leftover, we will eat. Whatever the leftover, we will eat. Why? Because that is our house. It's our house. No, if it's there, we will eat. If it's not there, we'll starve, or we will cook food later. Yes or no? It's the same way, because you're the owner of the company. First, you will pay off the actual who have trusted in the company, who have kept trust in the company. The debenture holders, the people who have given loan, the people who have supplied goods to you, the people who have worked for you, the employees, if their dues have to be cleared. After all of these, then comes the preferential shareholders. These preferential shareholders are given some preference, they're given some kind of priority when it comes to payment of the repayment of capital, right? Also with respect to dividend also. We will learn that in the preferential shareholders. But now, okay, after all of these are paid off, whatever is left, the balance will be given to the equity shareholders, right? This is something which I wanted to tell you with respect to equity share capital. And when we come to shares with equal voting rights, obviously 1:1. Okay, if you have one vote, you will get one share. If you have one share, you will get one vote. Okay, shares with differential voting rights. Ma'am, what are these? Obviously, you are not getting how many say for example, for every 10 shares you are getting one vote. For every 10 shares you are holding, you're getting only one vote. Just think. So these are shares which carry differential voting rights, not equal. Differential voting rights. Come, just come to the example. There is one example here in your book. Let us read that particular example. Okay, okay. You obviously there might come to your mind a doubt that, why are these differential shares issued? What is the benefit of giving? Who will purchase these shares, ma'am? You're telling one equal voting rights, one share, one vote. Okay, but these differential the shares with differential voting rights, who will purchase these shares? Ma'am, why are these shares even being issued? This is the probable question which comes to your mind. But children, just think, not every person who will purchase the shares are interested in the to vote in the general meetings of the company. They're only purchasing it for capital appreciation. So for example, I go and purchase in Reliance company shares only for capital appreciation. I feel so that if I invest, say, my money in Reliance, if the Reliance performs better, obviously I will get good rate of dividend, one thing, and also my the prices of the shares will increase. Obviously, my capital appreciation. For that, I'll be investing in the shares of the Reliance. Now, am I really concerned with who are appointed as auditors of that Reliance? How is the business performing? What is the rate of dividend they want to declare? What are the business decisions they want? I am least concerned. I have my own work to do here. I am very much busy with my CA practice. I am very much busy with my family. I am very much busy with teaching you all students. So I am least bothered with the business of the Reliance. What I have done, I have invested, yes. Why did I invest? Because for capital appreciation, for my money to grow. That's all. That's the only intention. Okay, I am least bothered with what is happening with the company. So I do not want to go vote in the general meeting of the company, right? So for me, I can purchase shares with differential voting rights. Yes or no? See, let's consider one example here. It is to be noted that Tata Motors in 2008 introduced equity shares. See, there are usually company do not issue. It's only normal equity shares they issue. Few companies come up with DVRs, shares with DVRs. Okay. See, one such company is Tata Motors. Okay, equity shares with differential voting rights called A equity shares. The name of the equity shares is A equity shares. In its rights issue, okay, you don't have to worry about that. In the issue, every 10 A equity shares carried only one voting right. So, see, if you have 10 shares, you will be getting only one vote. Okay, fine. But would get, but would get 5 percentage points more dividend, 5 percentage points more dividend than that declared on each of the ordinary shares. So, normal equity shareholders who have that 1:1 voting right are getting less dividend than mine. Meaning what? You are getting a higher rate of dividend. What do I want as an investor? Obviously, that is only I want. No, why will I go and vote in the meeting? I'm least bothered in that. What do I want? I want better returns. So I'm getting 5% more. I'm very happy, no? Yes, I'm very happy. Also one more point. Okay, since A equity share did not carry the similar voting rights, it was being traded at discount to other common shares having full voting. Trading at discount meaning what? The normal shares which have 1:1 voting, if they are trading at say rupees 1000 per share, my share 1:10 voting, for every 10 shares I'll be getting only 1 vote. My shares are trading at discount. Say I'm getting it only for 900 per share. Oh, what else do I want? I'm getting the shares at lesser price, and I'm also getting 5% more dividend. I as an investor, what else do I want? Yes or no? People who are really concerned with the business of the company, what is happening, who wants, let them go and buy the normal equity shares, no, for rupees 1,000. Yes or no? Getting it? Everyone? Yes, ma'am. Okay, the other companies which have issued equity shares with differential voting rights, popularly called as DVRs, are Future Retail, Jain Irrigation, among others. These are the other examples of companies who have issued DVRs. Right? Clear? Kinds of share capital, equity share capital with voting rights, with differential voting rights. Very good. Done. Now come to preference share capital. Now come to preference share capital. What is this preferential share capital, ma'am? Okay. Here the shareholders get preference or priority with respect to two things. And what are those two things? With respect to payment of dividend. With respect to payment of dividend, also with respect to repayment of capital. Also with respect to repayment of capital. Okay, when compared to equity shareholders. What is this? See children, preference share capital. What the name itself tells, preference. So you're getting a preference than the equity shareholder. With respect to what? With respect to two things, payment of dividend and repayment of capital. What is it? Say children, also in these preference shares, okay, it's not there in your book, but you can just make a note of it, no problem. Okay, see. Let's discuss little more in detail. Okay. See, when it comes to dividend, because they're talking about payment of dividend, I'm telling you, when it comes to dividend, there are again two kinds. One is cumulative, the other one is non-cumulative. And what is this cumulative, non-cumulative? See children, usually the company pays dividend if the company has profits. If the company has profits, company will pay dividend to the shareholders. So when it pays dividend to the shareholders, the first priority is given to the preference shareholders. Next comes equity shareholders. Okay, this is fine. Now, if the company does not make dividend, it's not necessary that every year the company makes profits, right? So if in case the company does not make profits, and if in case it does not declare dividend for that particular year, okay, now think there are two kinds of preference shares here with respect to dividend, cumulative dividend, non-cumulative dividend. Now, if the company does not declare dividend, so these non-cumulative preference shareholders, they will not get anything. They'll not get anything, but they'll get whenever it is declared, they will get non-cumulative. But cumulative shareholders, cumulative preference shareholders, for them, if the dividend is not declared for that particular year, and for the next year also they do not declare, and for the third year, suppose they will declare, at that point of time, this dividend also gets accumulated, this also gets accumulated, this also gets accumulated. All the thing has to be paid by the company. The name itself, cumulative, even though it is not paid, it gets accumulated. It gets accumulated. Getting it? Simple. Yes, ma'am. When it comes to conversion, ma'am, what is this conversion? See, again, there is convertible preference shares. Also, there is non-convertible preference shares. What is this convertible preference shares? Meaning, these preference shares can be converted to equity shares. They can be converted into equity shares. Non-convertible preference shares, they are preference shares only. They cannot be converted into equity shares. So all of these you will learn in your later classes, but just for your information, I am telling you. Okay. Convertible preference shares means they have a right to convert it into equity shares. Okay. This is related to conversion. Then it comes to redemption. When it comes to redemption, again there are redeemable preference shares and irredeemable preference shares. In India, we do not have this. If you have issued preference shares, you have to redeem it back. Meaning you have to pay if you, what is redeemable preference shares? Okay. See, I am a preference shareholders. I have given money as capital to the company. As capital to the company. It can use it for so many years. So after so many years, the company has to repay back the capital to me. So redeemable. It will redeem the preference shares. I hold the preference shares. The company has issued preference shares. After some point of time, it will redeem the preference shares and it will pay back my capital to me. Yes, it will buy back those shares. It not buy back, basically, it will buy those shares and give back the amount to the shareholders. That is redeemable. Irredeemable preference shares, it is not there in India. Fine. Then comes to, okay, one more, participation. Participation. What is this participation? See, children, here also you have participating preference shares. Okay. You also have non-participating preference shares. Ma'am, what is this? Children, participating preference shares is that they get additional dividend. They get participating in the dividends, participating in a dividend or participating with respect to surplus profits. When the company is winding up, if first they will get whatever they have, whatever they have to get, preference shareholders, whatever they have to get, they will get. And even if something is left out, then they will form part of the equity shareholders. If something is left out, then something additional is given to them. Something they get a right to the surplus. They get right to the surplus, whatever is left after paying off all the liabilities. Getting it? My point. So they can participate in the additional dividends. Say for example, dividend also. If company earns up to some point of profits, up to some profit, these will get normal amount of dividend. Normal dividend they will get. If it gets super profits, it will get more profits up to a beyond limit. The company is making profits at that point of time. If the preference shares, if these preference shares are participating preference shares, they can participate. They are eligible to get more dividend, extra dividend. Getting it right, everyone? Also, they can participate in the surplus profits of the profits of the company during winding up also. Okay, fine. This is also clear. Now, what is it? They get preference or priority with respect to payment of dividend. These will get, first I told you, first whatever dividend is declared, first it will be paid to the preference shareholders, later to the equity shareholders. First to the preference shareholders, later to the equity shareholders. Also, when it comes to repayment of capital, when compared to equity shareholders, these preference shareholders are given priority. Are given what? Are given priority. Can we read it now? Yes. Yes. Okay. My battery is running low. Fine. Preference share capital. However, this act shall not affect the rights of preference shareholders who are entitled to participate in the proceeds of winding up before the commencement of this act. Children, this is not applicable because they're talking about the previous act. They're telling whatever the rights which are being given during the previous act, that will not affect, those rights will not be affected by this particular act. That's not important for your examination. Leave it. Okay, according to, oh fine. Equity share capital with reference to any company limited by shares means all share capital which is not preference share capital. So simple. So it means all share capital which is not preference share capital. What is preference share capital? They'll tell now. Okay, preference share capital with reference to any company limited by shares means that part of the issued share capital of the company which carries or would carry a preferential right with respect to payment of dividend and repayment of capital, with payment of dividend and with reference to repayment of capital. Okay, fine. Payment of dividend either as a fixed amount or as an amount calculated at a fixed rate. Fixed amount, say for example, every preference shareholders will get rupees 10,000 as dividend, or amount calculated at a fixed rate. Say for example, every preference shareholder will get 8% of the 8% of the value. Say 8% preference shares of rupees 10 lakhs. So every year they will get 10 lakhs into 8% as dividend at a fixed rate they will get, or as a fixed amount. Okay, which may be either free or subject to income tax. You leave that. Okay, and repayment in case of a winding up or repayment of capital of the amount of share capital paid up or deemed to have been paid up, whether or not there is a preferential right to the payment of any fixed premium or payment on any fixed scale specified in the memorandum or articles of the company. don't have to worry much. They're talking about the premium. What is this premium is, children? Say, for example, if the preference shares value is 10 lakh. If the preference share value is 10 lakh, the company will agree that at the time of repayment of capital, they will pay an additional of say rupees 10% to the whatever amount they have taken as capital from preference shareholders. They will agree that they will pay back additional 10% as premium, additional 10% as premium. So they will have to pay 1 more lakh. So total during repayment, they will have to pay back 11 lakh. So whether or not there is preferential right to the payment of any fixed premium or payment on any fixed scale, these are called preference shareholders. Okay, repayment in case of winding up or repayment of capital, whether they carry a preferential right to the payment of additional premium or not, they are called preferential they are called preference shares. Yes, preference share capital with respect to payment of dividend and repayment of capital. Okay, so we are done with that. Yes. Okay, then there is something called exception. Okay, in case of private company, section 43. Section 43 is this kinds of capital. Okay, shall not apply where MOA, AOA of the private company so provides. Obviously, private company, whatever they write in the memorandum of articles association or articles of association, that will apply. So the section shall not apply where the MOA or AOA so provides. So, okay. So I think we will stop it here today. Okay. We will continue in the next class. So we completed kinds of classification of capital and kinds of share capital, types of share capital, right? Okay. Are we done? Everyone clear? Please, I request you all to please let me know how you are feeling about the class. I want you to comment. Please don't hesitate to comment. I will take in your positive comments also, your negative comments also, because I have to improve according to your requirement. I should know what you want, right? I should know what you want. Please let me know. Just don't see the video, everything is done. Okay, done. Close your phone or open Instagram and start watching reels. No, right? Please let me know. Please show some kind of interaction. Give me some comments. Please like the video, right? Even if you like the video, like the video. If you don't like the video, it's fine. Okay, whatever you feel, positive or negative, please tell me. I'm always I will change according to your needs, right? Right, everyone. Let's meet in the next class. Okay, done. Thank you so much.